How's it going, guys? Liam here from AltSignals. Today is TA Tuesday and we'll be discussing some technical analysis on different coins, and we also offer tutorials on technical analysis as well. As always, if you could give us a like, subscribe and hit that notification bell, and let's get into it.
AltSignals.io.
Okay, so today we're going to be looking at trading flag patterns and also identifying flag patterns. So the flag pattern is the most common continuation patterns in technical analysis. It often occurs with a big impulsive move, so like a jump up like here. The impulse move is followed by short-bodied candles, countering the impulse trend. So instead of it continuing up, we see kind of a slight reduction, and that's what's called the flag. And obviously it's named that because you can see how it represents the flagpole and the actual flag itself. So often the breakout flag is the same size as the impulse leading the flag. We can use this to create our take profit levels. So for instance, we can see here the overall impulsive move, then the flag pattern itself. And so what we would expect to see is the same impulse again. So we would then be able to set some take profit targets as to where we think that's going to hit. So for instance, we'd put a first take profit here, second take profit up here, based on the fact that we're using the same pretense that the flag impulse move from the initial start represents the same initial move on the new impulse as well. There are two types of ways we can trade flag patterns. So we've got risk entry and safe entry, which we'll go into afterwards, but I just want to kind of give you an idea of what we're looking at here. So the same setup is mirrored on the bear flag, except it's basically upside down. So we see a massive drop in price, that's an impulse, and then we see a slight correction going up, and the same again once we hit this particular point here, we would then look for a new impulse move, and we would set our take profits exactly in the same levels as the initial impulse. So let's say it was 10%, it dropped, then what we were looking at is another potential 10%, so we might set a take profit at 5% and 10% as well. So risk entry, so called risk entry because we haven't got many confirmations apart from the bounce off the Fibonacci level. Price may have the potential to go lower for a deeper correction before moving up, whereas the safe entry, the confirmation that is a valid flag, would be the break of the flag pattern. So how to trade risk entry. So what we're essentially looking for is the price to jump off the Fibonacci levels, so such as the 0.5 or the 618, and then enter with stop losses below or above the correction. So for instance, we would set our stop loss here below the flag, and obviously above if we're seeing a bear movement. So one of the advantages of doing a risk entry is that we can have small stop loss and have a great risk reward ratio. Also, we can gain an entry at the start of the move and hold. So that's a risk entry. So let me just show you some examples of a risk entry here. So here are the same setup. Here's your impulse move, then we see a correction, and as you can see, we're creating that flag here, and there's the flagpole. So what we're looking for essentially is potentially this key area here and here. As you can see, this is our stop loss, and what we're looking for is a move or the new impulse essentially starting here as well. Here's another example on the opposite side. So we have the impulse, so we have that drop in price, then we see a correction on the up, and as soon as we hit this particular area here, what we're looking to do is set our stop loss again, as you can see right there above the correction point, and again same here, bang on the correction point for the initial drive in the impulse. So safe entry. So safe entry requires more than one confluence and requires confirmation. So if we have the rejection of the Fibonacci level as well as a breakout of the flag, confirming that it's valid pattern. So how do we trade using safe entry? So for safe entries, we want to enter upon the break of the flag pattern. So with stops above or below the flag, depending on whether it's a bull or a bear flag, and the first take profit would be the recent structure level, and the second take profit would be the length of the impulse which led up to the correction. So the disadvantages of using a safe entry is that it requires a bigger stop loss, which makes risk reward ratio not as great as the risk entry. However, the probability of the trade succeeding is a lot higher. So as you can see here, the overall the kind of area in terms of where your stop loss is placed is a lot larger, and you can see here again the massive sort of gap between the stop loss. So yes, we are getting in a bit later. We've got more confirmation based on the fact that it's hit everything that we've suggested, but we're taking the trade a little bit later essentially. So it does leave a lot of room for a potential loss, so the losses will be higher. However, in some senses it's safer because it's hit everything that we expect to hit, and there is a more likelihood of that impulse move from the flag pattern initially set that we would be able to gain that percentage that we're looking for, with not worrying so much about the overall losses, because it's hit what we would normally expect to see in the setup itself. You can find this information out on our trading view, so you can go to trading view and then search for AltSignals. You can check our trading signals out on AltSignals.io as well. So we offer Binance signals, which are doing amazing right now. I think I'm up at 132% alone on one trade at the moment for Ethereum. So it caught a massive move on Ethereum. So I'll show you that now. Okay, so here's the ETH chart. We're on the perpetual futures contract on Binance using the alt trader signal, and we're on the 15-minute chart as well. So this came in last night. Yesterday evening. We've had a massive drop in price, as we have pretty much all over the crypto market, but this signal caught in a nice drop for us, and by the looks of things we're going to start to see it heading down again, or potentially start to do some sideways action and then maybe break out on the upwards. But yeah, I kind of at the moment rely on the alt trader indicator for my trades, especially as well using the Binance signals, so they work in conjunction together. And yeah, we everything's manual, everything's automatic. I'm set here at 100, and it does its job for me. And again, I probably wouldn't change it now, but yeah, I'd definitely check out the indicator and the Binance signals from AltSignals.io. That's it for today, guys. So as always, if you could give us a like, subscribe, and hit that notification bell. And you can look at our previous video, Market Monday, where we discuss what's been going on over the news for the past week, where we see the crypto market heading, and kind of just give you an overview of the whole week moving forward as well. That's it for today, guys. Take care.